Hey everybody, Smart Silver Stacker here. Hope you're doing well. So this is a market crash alert, and it looks like the stock market bubble may have found its pin in the form of Chinese AI model DeepSeek. The release of this new model is sending shockwaves through the markets, and silver is no exception. Now, this comes at a time when silver sentiment is already at incredibly low levels. But if this sell-off that we're experiencing today does in fact turn into a full-blown market crash, then there may be a historic opportunity for stackers right around the corner. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. All right, everybody, let's delve into what may be a market crash developing before our very eyes. As you can see from this chart, NVIDIA is down almost 17% at the time I'm recording this video. And if NVIDIA and other AI-related stocks have been the golden goose of the massive stock market bubble which has developed over recent years, then new Chinese AI startup DeepSeek may be the fox in the henhouse. And what's going on here is this AI model was released by a Chinese startup, and it is casting doubt on whether or not the significant amounts of AI infrastructure that have been priced into the market for months, years now, may in fact not be necessary. The bottom line is that this is an AI model which rivals the best AI models from US companies such as Meta and OpenAI. The Chinese have released a completely open source AI model, and the biggest development is that potentially due to restrictions on hardware for AI being put on the Chinese by the US, Chinese engineers have developed an AI model which is much more resource efficient than other leading models. So the idea here is that with this type of open source AI model, you may not need the massive numbers of GPUs and chips and computing power in these data centers that previously was anticipated to be needed by the AI revolution. And as a result, tech stocks like NVIDIA and others, ASML, manufacturers of lithography equipment, all of the big AI names that build all of the components necessary for training these AI models, are selling off sharply today. You can see here that the NASDAQ is down over 3%, and along with the NASDAQ, just about everything is selling off. The S&P is down. Now the Dow is slightly in the green. It has rallied off of its lows, but energy is selling off, crude oil is down, gold is down. If we look on Yahoo Finance here at this tab of commodities, just about everything is selling off, and silver is no exception. Now, if we go to the chart of silver, you can see that it has rallied somewhat off the lows of the day. It dipped briefly below $30. Right now, it's about 30 and change, 30.01 right now, so barely above $30. But you know, we've talked about this many times on the channel, how in the event of a major market crash, silver will not be any exception. And when that happens, everything tends to sell off. And what this does is it can create massive buying opportunities for those of us who keep our heads on straight. Now, this is not financial advice, so don't take it as such. But if there is a major sell-off, if you are able to not panic, and if you have managed to keep some powder dry, which I think is very wise at this point in time, there may be a historic buying opportunity across a variety of assets, but particularly in physical silver. Now let's talk about why. First of all, any massive market crash or sell-off will likely be met by huge amounts of stimulus out of central banks around the world, led by the US Federal Reserve. In fact, look at today. One of the few things not selling off today were bonds. You've got the yield on a 10-year dropping today, so that is indicative that someone in the market is buying up bonds. Now, who could that be? Well, my guess is it's the Federal Reserve trying to do some damage control. Of course, I don't have any information to verify that, but that is my gut reaction. I mean, who's out there buying up bonds when everything else is selling off. And in particular, I believe that there will be a massive buying opportunity in silver if we get a significant market crash, because silver is already massively undervalued by just about any metric. This chart here represents the short interest in the SLV ETF. That is one of the most traded derivative products of silver, and you can see it has spiked up in recent months. So the sentiment in silver already incredibly low, and the contrarian in me looks at this and thinks, well, who else is left to go short, right? How much farther can the price fall? However, one caveat is that in the event of a market crash, silver is likely to drop precipitously. And in the past, I would have speculated that even if we get a massive drop in the spot price of silver, that premiums would likely rise, so that even though the paper price drops, you can't necessarily get physical bullion at a major discount. However, this time around, given the negative sentiment in silver, I don't believe that that is true. Look at this tweet from Josh Philip Fair. He is the CEO of the Scottsdale Mint, and he posted on X just a few days ago that silver refineries in the US are backed up more than 3 months, and that they are processing so much material into COMEX good delivery products on behalf of banks that industrial consumption is having issues finding reasonably priced physical silver. And what this means is that retail investors are selling their products, the small coins and bars that we stackers tend to gravitate towards, and they are being processed into large COMEX bars, the 1,000-ounce bars that are traded and used to back up those futures contracts on the COMEX. So what this means to me is that if we do get a crash in the price of silver, there may be historic opportunities to acquire physical metal at steep discounts. Think 2020 levels, March 2020, when the spot price of silver dropped to $12. That was one of the greatest buying opportunities in silver in living memory. But even at that time, premiums on physical products remained somewhat elevated. I don't think anybody was able to actually go out and buy an ounce of silver for $12. But in this case, we have a perfect storm of factors that could contribute to a major drop in the silver price. And even right now, prior to a market crash, just look at the premiums on junk silver over at SD Bullion, $230 for a $10 face roll of 90% US silver, junk silver, constitutional silver coins. So that is a very low premium right now. Premiums on these retail products, of which there is a very limited supply. Junk silver, it hasn't been minted since 1964, and a lot of it has been melted down over the years. So when the premiums on this are low, it confirms that investor sentiment, especially among retail investors, for silver is very, very low at the moment, and that could go even lower in a market sell-off. So what smart stackers need to do, and again, it's not financial advice, but if you've got physical metal, you need to sit tight, because that is the kind of asset that you want to have when there are massive trade wars erupting, tariffs and sanctions being imposed on nations around the world, and now potentially a pin for the stock market bubble, because who knows how this could play out. You could see massive waves of trillions of dollars of QE in short order from central banks in the event of a market crash. But also, if you've got some powder dry, it's probably wise to keep it that way in case we do see some huge drop. Maybe you can get silver at a 50% discount one day if markets sell off, maybe a 75% discount from current levels. I don't think we can discount any possibilities here given the size and nature of the current bubbles in assets like stocks and crypto. And look, also, I expect that if there is a crash, those bubbles will be reinflated with a vengeance by central banks. So there may be other assets that you want to accumulate as well on a major drop. But the main takeaway, I think, is that a massive market sell-off should not be looked at as something to fear. As long as you are not trading with leverage, you should just be absolutely fine. If silver sells off, the number of ounces that you possess is not going to change, but there may be opportunities to acquire assets at a huge discount. And look, market crashes are really when fortunes are made. That's when you can get in and buy things at very, very cheap valuations when everybody else is panicking. So I don't give financial advice, but if I did give any advice, it would be to keep your head on straight in the event of a market crash. Don't freak out just because your 401k or your stock portfolio drops. Look for opportunities to acquire assets. And if you don't have any dry powder, well, maybe you want to figure out some way to acquire some, whether that's selling something that hasn't plummeted in value or just doing whatever you can to get your hands on some cash in anticipation of a market crash. But let me know what you think in the comments down below. Is DeepSeek going to be the pin that pops the stock market bubble? It very well could be. So let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking. If you want to see more videos like this one, check out the one popping up on your screen right now. Smart Silver Stacker, out.